Hi, I am Akshat Malhotra. This isn't just a standalone video, but a part of an entire course called The Fundamentals of Personal Finance. In Module 1 and 2, we covered the key concepts and went straight into creating an effective budgeting plan. Now, in Module 3, we deep dive into the various financial assets where you can park your money in. Oh, and don't forget the free Excel calculators that we've created just for you. In this section, we're going to talk about the equity products that are available for us to invest our money in. And the most common talked about, something that we all love investing our money into, but are also a bit scared of, is the stocks and the shares. So what are stocks and shares? Let's understand this with a very simple example. Let's say that I bake cakes and I love baking cakes. And whosoever comes at my place, my friends, my relatives, they all say, Akshat, you should open up a bakery. You really bake nice cakes. Why don't you give this a serious thought? Why don't you open up a bakery? And for now, I did accept that proposal, and I thought, yes, let me go ahead and open a bakery. And I figured out all the logistics. I looked at a shop, figured out the rent and all those things. And I found out that I need 1 lakh rupees to start my bakery. Assuming, example, okay? पता नहीं 1 लाख में खुलती है कि नहीं. But I need 1 lakh rupees to start my bakery. Now, I have 80,000 rupees only. I don't have 1 lakh rupees. But I really want to open this bakery. So I thought that one of the options is that, let me go to the bank and take a 20,000 rupee loan. And when I went there, bank said, man, who are you? And we've not tasted your cakes. Why should we give you a loan? What if your bakery doesn't work? We can't take this risk. So the bank refused to give me the loan. So what I thought is, since people love my cakes, they do trust me, right? So what if I actually structure my bakery in a manner that I break my bakery into 100 parts? Okay? I need 1 lakh rupees in total. I break this into 100 parts. So the value of one part becomes 1,000 rupees. 1 lakh divided by 100 becomes 1,000 rupees. Now I have 80,000 rupees. So I take 80 of these parts on my name. I pay 80,000 rupees and 80 parts on my name. And the remaining 20 parts, I ask my friends and relatives, and whosoever is interested, they pay me 1,000 rupees and get one part. So similarly, I sold off the remaining 20 parts and got 1 lakh rupees of the total money to start my bakery. Now, the bakery performed very well. 3 months down the line, the cakes went flying off the shelves. Everyone loved it. We made great profits. We made great sales. And the total worth of the bakery is now gone to 3 lakh rupees. So 1 lakh rupees that was invested is now 3 lakh rupees. So my 80,000 has become 2 lakh 40,000. And everyone who invested 1,000, 2,000, 3,000 rupees has also tripled their money. So 1,000 became 3,000. And everyone is super happy, enjoying that Akshat's bakery really worked well for us. On the other hand, let's say, couple of months down the line, the bakery did not perform well. Nobody liked the cakes. Everyone was like, shit, what is this? We can't have this. Return our money. And so within a span of 1 month, I got to shut down the bakery. We weren't able to make any sales, any profits. And so the 1 lakh rupees that was invested is just gone away. 80,000 of what I personally invested is gone away. And everyone who gave me 1,000, 2,000, everyone who took the 20 remaining parts has also lost their money. Using the same exact example, same exact analogy is how the stock market works. When big companies out there want to start new businesses, expand their current businesses, they borrow money from generic public, from people. And if we as people trust the particular management, trust the company that yes, they have been doing good business and they have strong prospects to do even better in future, we invest our money into stocks. we invest our money into their companies, and in return they give us a portion of their company, a part of their company, a stock of their company, right? And that's exactly what stocks and shares are. That's how the stock market works. When we buy the stocks and the shares of a particular company, we invest our money into that company, we invest our belief into that company, that this company is going to perform well over the next many years. And if the company does well, our money also grows, and therefore we make returns. So let's look at some pros and cons of investing into stocks and shares. The stocks and shares could turn out to be a great wealth creator. If we identify companies who will perform well in the future, we feel that these look to be promising businesses, promising founders, and we invest our money into that, we buy the stocks and shares, and if they perform well, our money could grow multifold in no matter of time. But at the same time, it is risky, right? What if we do not identify such companies? What if the companies default? What if the companies we thought could do well but did not do well? We could end up losing our money. And so there is a high risk of losing the capital or the principal, and therefore this needs active attention. This needs a lot of active attention. And in general, we do not cover stocks in this particular course, in this particular workshop. But if you want to go invest your money into the companies, there are three things that you must always look at in a particular company. Number one is the founding team, the management team. How ethical they are, how clean they are, how visionary they are. Do they have a strong vision with it when it comes to taking the company to the next level? Do they have strong cultural values? Are the employees of that company motivated well? Because if the drivers of a particular organization are good, the company will go through tough times but will eventually get on track to succeed. So the first and the foremost thing is the management team, and the overall culture of the company is what you should try finding out. The second, I would say something that COVID has taught us, is how essential products does that company build. Is that company into essential businesses, which means that no matter what recession comes, no matter what COVID comes, does that company's sales continue to grow? So very random example. Whether it's COVID, whether it's recession, the people will never stop drinking tea. And so why don't we find out companies that manufacture tea? Because we know that whether even COVID comes, again, people will not stop drinking tea. In fact, they might take 2 to 3 cups in tension, right? So the point being that look out for companies that create essential products, that products whose sales might not get hampered if anything happens in the world. And finally, number 3, when you look at the companies, look at their historical performance. How's the performance been? Does the performance look consistently well? Is it consistently growing? Don't look for companies that have a graph of, going up and then going down. Maybe they did perform extremely well over the last 2-3 years, but previously they were doing really bad. So the companies that have a graph like this, zigzag, try avoiding them. Go for companies that have a consistent graph, a consistent growth, who may be just given 10 to 12% or 15% returns, or have just made about 15% profits, but have made 15% profits consistently over a period of 5 years, 10 years, 15 years, right? So these are the 3 essential things that you must look at when you're selecting the companies in which you want to invest your money, the companies for which you want to buy the stocks or shares. And so, coming back to our pros and cons about being a wealth creator, but at the same time, high risk of losing our money, because this really needs active attention. We really need to, even if not in a every day, we should take out some time and look at least once in a week in the companies that we've invested, read about them. And so since this might not be a cup of tea for everyone, this might not be possible for everyone, there is another way of investing our money into equities as well as other places. This is not a financial avenue as such, but a method of investing our money into equity markets, even into fixed income markets and other ways, something called as mutual funds. And what are basically mutual funds? So in mutual funds, there is one particular fund manager that is the key person, that is the key responsible person of taking decisions on where your money needs to be invested. We'll cover mutual funds separately in the next few modules. But for now, I just wanted to mention that mutual funds are a way in which every one of us can enter equity markets, fixed income markets, and even gold, commodities, real estate, so on and so forth. One way for us to trust the other person, trust the particular fund manager of one particular company, who could actually take the right decision, who's from the right background, who's done their studies in finance, who has done all the certifications, who's super curious and interested in learning about stock markets, or spending their time for years into stock markets. And they can actually help us invest our money into various asset classes which they feel, into various financial venues which they feel will provide strong returns in the future. Right? So mutual funds are nothing but a way of investing our money into various financial avenues, though we are covering this in the equity section because majority of the mutual funds are equity oriented, and in general also people who want to invest into equities but do not have the right time, who do not have the appropriate time of spending time to learn about markets, use the method of investing via mutual funds. We're going to talk about mutual funds particularly in depth in the upcoming modules. But I hope you get the point. I hope you get the high level idea of what mutual funds really are. So there is this website by the SEBI, the Securities and Exchange Board of India, the market regulator, and they mention a list of registered stockbrokers on their website. We'll share the link with you as well. And let's say if you want to open up a demat account with HDFC, is HDFC one of the registered brokers? Let's go and search. Yes, see, HDFC Securities pops up. What about Zerodha? Zerodha is into a lot of news these days. We hear a lot about them. Yes, they too are registered. Grow comes up with, I think, Next Billion Technologies, something of that sort. Yes, there you go. Next Billion is the parent company. So the point being that whomsoever you want to start investing your money with, there you go. Sher Khan is also one of them. So the point being that wherever you're going to open a demat account, just quickly run through on this particular website by SEBI and make sure that they are registered stockbrokers, right? And similarly, mutual funds, well, in general, we know that most of the mutual fund companies, HDFC, Aditya Birla, SBI, these are all brand names, these are known names, but you could still also go and look whether these AMCs, asset management companies is what they call, are registered with SEBI. And so on this particular link, you will find all the registered mutual fund companies. Let's search again, Mirai. There you see, Mirai Asset MF is a particularly registered mutual fund AMC. And let's further look at this, something which is a lot hearing in news these days, Parag Parekh, right? PPFAS, yes, so that is also one of the registered AMCs. So this is how you can make sure the safety part, the SLR principle, the safety part, that your money is safe if you invest into these particular AMCs or these particular stockbrokers, right? So yeah, that's the what part. In the next section, we're going to cover the next financial avenue. If you have any questions, please add them in the comments below and I will make sure we answer them. Do like, share, and subscribe to this channel.